What a privilege it is to have Dr. Mark Dotzour back in Wichita and back at the Weigand Forum. He's a chief economist and director of real estate at the Real Estate Center, which is headquartered at Texas A&M. He earned his PhD in finance at the University of Texas, and he was associate professor of real estate and finance at Wichita State University for 10 years. As chief economist, he is currently doing market research to monitor how global and national trends affect residential and commercial properties. Dr. Dotzour has published 82 articles in various magazines. He's given over 1,000 presentations to well over 150,000 people. He has been published in many magazines, among which the Wall Street Journal, Money Magazine, Business Week, and the USA Today. He's been a guest on the Jim Lehrer news program, PBS, Bloomberg. Please give a warm Wichita welcome to Dr. Mark Dotzour.
Pardon me. Let me make this gentle transition up here so things remain plugged in just for one more second. Yes. It's wonderful to be here with you this evening. Thank you, Nestor, for inviting me. It's fun to work with you again. It's fun to see everybody here. This is like a high school reunion to me, and Louis for that matter. I'm going to talk kind of fast. I'm looking at my watch. I'm going to be done at 6:15, and just so you'll know ahead of time. And so I put the theme up this year, clear sailing ahead. That was hard for me. I didn't like the idea. As an economist, there's a 50% chance anything you say is wrong. And it's hard. It was really hard for me to say clear sailing ahead. And I kept going back and looking at more detail, more data, and more information. And I couldn't find any reason not to put this up here. So the only reason I wouldn't have come up and said clear sailing ahead is because I just didn't have the courage to recognize the facts in front of me. So I'm telling you, it looks good. With that said, I added a couple of slides today because the only thing that people seem to want to talk about these days is Bitcoin. You'll remember when people were all wanting to buy gold, and I was telling you if you're thinking about buying gold, I'd recommend you just take cocaine instead because at least you'd feel good before it kills you. And then I was telling you that it might be good to invest in real estate. That's what I do. I'm not here to sell real estate. I don't care if you ever invest in real estate. Weigand does, but I don't. That's not what I'm here for. And so after all these people saying, what about Bitcoin? I thought this was just 70-year-old guys that had already bought gold and ammunition, and now it's like, what else can I buy? How about some Bitcoin? But it's not. It's millennials. It's people that are 25 years old. They're wanting to do this. So anyhow, I thought I better start addressing it. So with that said, let me just get with it. Here's the founder of Bitcoin. His name is Satoshi Nakamoto. The only problem is that's a fake name. That's not his real name, and nobody knows what his real name is. And a lot of people don't think this is the guy that did it, and they think that a guy that did it was an American or a European. So it's a total fake. Nobody knows who did it in the first place. I like Satoshi, looking good there. Okay, here's some facts for you when you get ready to dive into it, which I would highly recommend. Maybe not. To buy Bitcoin, you have to sign your check off to what's called an exchange. And that's where it gets a little hazardous, because one exchange was called Mt. Gox. They lost $450 million in 2014. Keep in mind, they never lose their money. It's losing your money. And are these regulated exchanges? Not at all. Are you insured when they lose your money? Not at all. Knock yourself out. Go heavy in investing in this. Forget these apartments that give you a puny 6% return when you can lose all of your money in Bitcoin. Do it. Send me some notes to tell me how rich you're getting. NiceHash lost $70 million last year. CoinCheck just reported in Japan they lost $450 million. It might be as big as Mt. Gox. They went bankrupt. Crypto Exchange just a few days ago lost $170 million and made a special note in the journal to let people know we can't pay back our customers. It's kind of a nice non-volatile environment. Hit 20,000 on December 17th, fell 25% on the 22nd, dropped below 11,000 on January 16th, fell to 7,700 on February 2nd, and falls with 3 L's. That's what happens. I just did this slide in the lobby a little bit ago. It falls to 6,000 on February. That's kind of good. It makes it feel like it really fell. I'm just going to leave that in there. Oh, and by the way, China banned crypto exchanges, period. You know who uses Bitcoin, don't you? See, after 9/11, we kind of had a little meeting with Switzerland. A few of our good folks went over there and said, hey, this deal about Swiss bank accounts, done. You know what I'm saying? We're not going to have these Swiss bank accounts anymore, anonymous people and all of that. We're not going to let you launder money anymore. So we get rid of Swiss bank accounts. So when you want to move money so that your government can't track it, largely from illegal operations of some kind, you can't do a Swiss bank account anymore, so you get Bitcoin. So that's who the major user is. Here's what I think of. When I think of investing in Bitcoin, this is the visual that came to my mind. I mean, just help yourself. And you only lose half. That's when you put your money into it and they steal most of it. And the other half you lose later on when it drops from 6,000 to about $5. Could be wrong, 50% chance I'm wrong. All I know is that Bitcoin is open source software, and what that means is every one of you can have Bitcoin, you can make Batcoin, you can make Buttcoin, you can make Blitcoin, and you can print them by the bazillions, and there's nothing new, there's nothing unusual or cool about Bitcoin other than it's a brand. And when other people make 1,000 different Bitcoins, there will be nothing unique about Bitcoin, period. It's like wampum. Just look up wampum. See what you think about it. Okay, so that's enough of that. I just felt like I needed to do that. And I'm going to do that all year because this is exactly what's going to happen. This is exactly, I just would like to see that happen to you. The reason people are curious about how long this expansion can last is because we're now 2 months away from the second longest economic recovery since World War II. And we're approaching the one that happened when JFK was president and then Lyndon Johnson back in 61 to 69. So people are saying, wow, how long can this keep going? All of you know I'm not a Republican or Democrat anymore, and I have decided that the Democratic Party and the Republican Party are hindrances to the furtherance of well-being in America. I'd like to get rid of both of them, okay? So I'm not a political person, but I got to warn you, I might say something nice about Donald Trump, and I'm pretty sure that's illegal in 39 states. So you can relax about that. I don't like him. I didn't vote for him. I voted for Gary. In Texas, we had Trump, we had the other one, and we had Gary, and I voted for Gary. I didn't even know who he was, but I thought Gary's a good choice for me. So I'm not a Trump fan, but I'm just telling you, even idiots can do stuff good by accident, if nothing else. And I'll tell you this, if you think you thought Ronald Reagan was good for business in America, I'm coming to the conclusion based on facts that Donald Trump may be better for America business than Ronald Reagan even. I mean, this guy knows business. He doesn't know anything else. When he trumps about Oprah or he trumps about Arnold Schwarzenegger's ratings, I mean, you go, it's weird to watch. If you make money trading the 10-year Treasury, every time Donald Trump looks presidential, the 10-year interest rate goes up because like, wow, this guy's going to get stuff done and the economy is going to thrive and we're going to have inflation. And then every time he does something dumb like Trump tweet about Arnold Schwarzenegger's ratings on the Celebrity Apprentice, you go back and look when that happened, the 10-year Treasury fell through the roof that day. It's like, oh, he's not presidential. We're not going to have any growth. This country's going to have no inflation. So if you want to watch, if you see a bad tweet, that's the time to short the 10-year Treasury before the market opens. The U.S. Index of Leading Indicators is showing no indication of a recession coming on. In fact, it's expanding. I mentioned to you at this time last year about this surprising euphoria I saw in businessmen and women all over this country the day after the election. And that euphoria has continued to this very day. In fact, that's what's causing people concern is that we're at full employment right now and there's too much euphoria and there's not enough workers to go around. I'll get to that in a minute. Pardon me. People say, how long will this last before this, when will we have a recession? And in my mind, the answer is when we stop creating jobs. This is the number of people getting a job every month, and here's the news, 80 to 250,000 people every month get a job. And as long as we create jobs, we're going to have more economic expansion. That's what fills up all that real estate you saw, was when an American gets a job. And in addition to getting a job, they're getting pay raises too. So we haven't seen this for a long time, where lots of people are getting jobs and lots of people are getting pay raises. It's good. That's why it's a good time. Consumer confidence just continues to blow up. Consumer confidence exploded the day after the election, straight up. If you're watching TV and you think Wolf Blitzer's telling you what's going on, and you go, wow, this economy's terrible. Wolf Blitzer just told me that. And meanwhile, you're out working with businessmen and women and investors all over this country, and they're absolutely on fire straight up. So consumer confidence the number just came out today. It's even bigger yet. Tax reform aftermath. Boeing going to add these companies, I've never seen anything like this. I'm only 63, so I haven't seen everything like Herb has. He said he was going to heckle me, so I want to get one in early on him. I shouldn't have done that now. I was like, oh no. Herb never loses on stuff like that. Boeing's going to add jobs. AT&T's going to add jobs. Everybody's going to add jobs. I've never seen anything in this life. All these companies just coming out and saying, we want to hire, we're going to hire. We're going to move jobs back from Mexico to America. We're Chinese manufacturers. We're going to move Chinese manufacturing to America. And that's awesome. That's what we want to do. People talk about all these trade things. Oh, what about NAFTA? Oh, what about the Trans-Pacific thing with China and all that? They're going to get mad at us and they're not going to do business with us. No, you know what? Actually, they're finally going to get to where they don't cheat and get all of our wealth and all of our jobs, and it's working. You see what's happening? These companies are starting to come here. That's what's been going on. Donald Trump's telling you the truth when we have been cheated on every treaty we've ever done. Whether it was with Japan or with Mexico or China, we lose, they win. You ever wonder why China owns $2 trillion of our bonds? You ever wonder why Japan owns $2 trillion of our bonds? Where do you suppose they got those? From selling baseball cards or something? No, they got that from selling us cheap TVs and furniture after we laid off all the American people and don't make it there anymore. That's called trade cheating in my mind. You don't hear that on TV. I mentioned to you years ago, if you're watching Fox News or MSNBC more than 7 minutes a day, not only are you wasting your time, you're causing yourself emotional damage. And I've upscaled that now to if you're watching any of these news media at all, you are in danger of not advising your clients properly. If you're still in the business world and people rely on you for some information and to make decisions, if you're watching TV for news, you could be dead wrong. Because these media are out to destroy politicians. Certain ones want to destroy all the Republicans, other ones want to destroy all the Democrats. Talking the book, total garbage, okay? Get your own dictionary out. Don't Google it. Open up the old dictionary. Let the dust come off of it. Let the smell of mildew come up in your face as you open that dictionary for the first time in like 38 years and Google the word. I said, no, don't. Yeah, see what I'm saying? I'm not saying either. Look it up and look up the definition of news, gossip, propaganda, and bias. And then look at what you get for a news feed off of CNN, for example, or any of them, Fox or MSNBC, I don't care. Most of it is propaganda and gossip, and it's all biased. And so watch it. It's fine. I'm not saying don't watch it, but watch it knowing full well that these people are out there doing nothing but selling advertisement. If you're a Democrat, they want to make you mad, so you'll watch every night to see what some evil Republican said about you, and that way they can show viewership. And over here, you're watching Fox, they'll tell you everything a Democrat said really bad, so you'll watch TV, because none of us really want to watch TV. It's a complete waste of our lives to do it. Okay, so with that in mind, you go, I don't know about that. You sound like a politician that talks like that. And my response to that back in Iowa, a big old farmer in a Q&A thing, was, pal, I've been talking like this since before Donald Trump ever got on the Celebrity Apprentice. He's just the only president that's had the guts to tell people the truth, and it's the truth. Here's some propaganda just for fun, just so you can see this. You start looking for it, you'll see it everywhere. About a day or two before the election, Dr. Simon Johnson, he's with MIT. That's a community college back east somewhere. it was kind of weird because up in Iowa, I gave a speech, and the guy before me was a Bitcoin expert from MIT. And I thought, boy, I hope he has to catch a plane. And sure enough, he did. He was gone because that guy probably roommates with this dude. All right, Simon Johnson, he's a management professor. What do management professors know about the stock market? That would be probably nothing. And yet, here this guy comes out day before the election, and it's widely picked up on financial circles. Investors in the stock market currently regard a Trump presidency as a relatively low probability development, but while the precise consequences of bad policies are always hard to predict, if investors are wrong and Trump wins, we should expect a big markdown in the market, and a big markdown in expected future earnings, and a likely crash in the broader market. Why would a guy come out that doesn't know anything about stocks and then say with authority from MIT's community college that his bad policies are going to make the market collapse? Why do you suppose a guy would do that 2 days before the election? To destroy a presidential candidate's hope. I know that happens. Don't worry about it. If we hear helicopters, I'll take the bullet. Don't worry about it. I'm right here. Go ahead. I've set off the fire alarm a time or two talking about Congress, and it doesn't matter to me. Okay? That's why you do this. It's called propaganda. That's all it is. Bad policies. And here's what I'm trying to warn you of. Don't watch Wolf Blitzer and then feel like you can advise clients to make good decisions. Because if you were watching that and then you told your clients that, you just ruined them. In fact, here's what happened that night. I remember being up that night. I'm watching the thing on TV somewhere, and it's 10:30 at night, and the CNN or whoever I was watching that night goes, oh, this is going to be a horse race. We're going to have to stay up all night till we know the election on this. And all of a sudden they go to New York, and here's Hillary Clinton's campaign headquarters in New York, and they're all sobbing uncontrollably. And I'm going, I don't see horse race in these faces here. I see this is game over. I went to bed at 10:30, woke up the next morning, and wasn't surprised with the results. But here's what was going on while I was sleeping. Somebody that heard Simon whatever from MIT, they're trading stocks in the middle of the night. Now here's the message out of this. If you ever feel the urge to trade stocks after dark in your pajamas, just don't do it, okay? Nothing good ever comes out of it. Because up in the top there, the Dow futures at 8:15, when they're telling you, oh, it's a horse race, anything goes right now, the Dow is at 18.4, and by midnight, when CNN says, Ohio goes for Trump. And then 2 hours later at midnight, the Dow futures are off almost 900 points. Somebody's selling all their stock. Somebody's shorting all their stock because Mr. Simon said, boy, the market's going to collapse because of these bad economic policies. And by the end of the next day, all that loss is totally gone. So somebody got completely obliterated by propaganda in the marketplace. This goes on daily. So just be careful. And students ask me in class, so how do you stay informed in this kind of environment? To me as a business person, all I need is the Wall Street Journal and Reuters. For whatever reason, Reuters doesn't seem to have an agenda to destroy American presidents. So with those two, as a business person, that's all I need to stay informed. Just a couple other examples of this. Here's Alan Greenspan back when he was Fed chairman. This is how you talk. This is what you see on TV when Fed chairmen talk, like Jay Powell did this morning, for example. The fact that our econometric models at the Fed, the best in the world, have been wrong for 14 straight quarters doesn't mean they might not be right in the 15th quarter, okay? And his famous quote of all time was, Congressman, if you think you understood what I said, I must have misspoken, all right? That's how these people work. Okay, here, and then I found this one the other day. I'm doing some research on the Kennedy era because this economic cycle looks a lot like the Kennedy era when JFK passed a tax cut. It didn't pass until after he was killed. Johnson put it through, but Kennedy created it. And this looks like right now. Well, anyhow, so here's Sir Leslie O'Brien, the head of the Bank of England. That's their central bank. And after he's out of office for a while, he's out there. What's happening here is that England is having trouble, and their English pound is going to get devalued big time. But he's out there saying, oh, no, things are pretty good, rah, 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 rah. And then afterwards, he's trying to explain how that works, and he goes, a major duty of every central banker is to learn how to exude confidence without positively lying, okay? I'm telling you, that's how this works. Propaganda, the Federal Reserve is trying to manipulate your behavior too, and don't you forget that either. Do you think when in 2008, when the commercial paper market totally froze up and every business in America was not going to make payroll on Monday, did you ever see Bernanke come out and go, oh, CP market just froze up and man, nobody's going to get paid on Monday? No, what they do is they come out and they say, on a Sunday, they usually come out on a Sunday afternoon when hoping nobody's watching on the front steps of the Federal Reserve and they go, as chairman of the Federal Reserve Board, I want to reiterate the Federal Reserve's commitment to its dual mandate of full employment and low inflation, and the Fed stands ready to provide any and all means and resources to maintain our dual mandate. What that really means is all hell is going to break loose in about 4 hours. You better duck. Household net worth is up to $100 trillion. Corporate profits are starting to go up again. Even though we're late in the cycle, profits are going up again. Tax reform works, gang. There's no magic why the stock market went up a couple thousand points, because if you made $100 in profit and would have to pay $40 in taxes, and all of a sudden you have $100 in profit and you only pay $20 in taxes, that's pretty easy to understand why the value of that stock goes up. And in addition to that, everybody wants to hire right now. Like it or not, Donald Trump knows how to create jobs. I think he's better than Reagan that way. In a lot of other ways, the guy's a nincompoop. But in that one vector, the guy's unbelievable. The amount of people wanting to hire in the next 3 months, you can't hardly see this sliver there on the far right side of your screen. It exploded again. It exploded the day after the election, and it exploded again. I've never really seen anything like this. Is now a good time to expand? I was with I'll just say I was with the National Association of Realtors, and their chief economist. What you have to understand about NAR is they support everybody. They grease the skids with Democrats and Republicans. And so whenever something happens, their chief economist is a wonderful guy. I've spoken with him a bunch, and I like him a lot. But he was describing before me, it's like, well, we have noticed some indication of an increase in activity in the U.S. economy. See, he didn't want to come out and say it, so I come out right after that and go, I'm seeing a little increase here, but I'm kind of seeing an explosion in the economy, all right? That's what's happening. So when you're talking to clients out there, you don't sit there and go, well, we're seeing a little bit of a modest increase in the economy, because you would be way wrong. And he just couldn't do that because there was half of the room was Democrats, and he knew it's illegal in 39 states to say anything nice about Donald Trump. I totally understand that. I don't care. I'm 63 years old. I'm not a Republican or a Democrat, and I'm not running for office or really care if you like me or not. I've always told people, it's like, I'm not here to do Zig Ziglar power positive thinking, let's put some lipstick on a pig and sell something kind of speech. And you know I have no self-esteem, and I don't care if you do either. What I'm hoping to do is give you some information to help you make good business decisions and help you serve your clients as best as possible. That's what I'm trying to do. Big companies, they want to hire too. 6 million jobs open. This is starting to shrink. We're at full employment, gang. Haven't been in this place for a while. We're in a labor short environment here. If you haven't noticed it yet, you will. Civilian unemployment rate is back down below, it's at a low. That's all you can say. The dollar's kind of going down. This is weird, troops, because usually when we raise interest rates, the U.S. dollar goes up. And why does that matter? Because that makes everything we buy cheap. When our U.S. dollar goes up, stuff we buy from China and Japan and Korea get cheaper. That keeps inflation down. We're raising interest rates, but the dollar isn't going up this time. It's going down. Why is that? I had to ask that question, like, wait a minute, why is that? Well, the reason is because people are starting to decide it's better to invest in Europe. We have a competitor for the first time in 10 years. The people in the commercial real estate business that own buildings all over this country, you haven't had any competition for the last decade because nobody wants to invest in Europe. Nobody wants to invest in Asia or India or anywhere else. And so it's all U.S. pretty much. Well, that's changing. We got a new competitor in town because people are saying now, you know what, Europe's looking pretty good. And so we do have a new competitor in town. That will put some pressure on cap rates simply because we now have a competitor in Europe. This just shows how money is moving. Long-term investors have collectively turned negative on the U.S. currency. People are buying stock. People are selling stock in America and buying bonds. People they're buying stock in Japan and Europe right now. That's kind of how things are working in a generality. Okay, so this is why I think it's full speed ahead. We're creating jobs, we're getting wage hikes, business enthusiasm is at almost a record high level period, at least in the last 12 years or so. So with that said, I'm hoping you're feeling giddy and euphoric right now because I want to talk about the challenge. What could go wrong? And the only thing that could go wrong in my mind is that interest rates go up too much. And there's two kinds of interest rates. This side of the room, your short-term interest rates. You're like a one-day loan or a one-month loan. Your short-term rates. I'm the Federal Reserve Chairman. I can control you. I can make you go up tomorrow and the next day and the next day. And when I make you go up, it costs more to borrow money to buy stock. It costs businesses more money to borrow money. Now over here on this side of the room, your long-term bonds, your 10-year treasuries. I can't make you do anything. I can be raising these people every day, and you can be going down. Alan Greenspan called that a conundrum. That was the day he found out he wasn't omnipotent. It was in 2004. Made him mad. I'm raising over here, and this is going down over here, and it's a conundrum. That's a cuss word for Federal Reserve Chairman. That is not approved by their official government affairs people or communications department. But he said it. I remember it. Okay, one of the big risks is that the Fed raises rates too much and breaks something. They would like to get the Fed funds rate up to about 2.5% in my mind, based on what I've read them say. They'd like to raise you up from 1.5 to 2.5 without breaking something. And what happens? How do they break something? Well, this is what it looks like when they break something, like in 1987, when they raised rates 6 times in 1 year, and the Dow fell 25% in what? 1 day. That would be like waking up in the old Wichita Eagle and Beacon tomorrow. Oh, they don't have the Beacon anymore. I'm really out there in age. The Wichita Eagle, and the headline would be, the Dow fell 5,000 points today. That's what happened when they raised rates too often, too many times. You go minus 5,000. What did they do the day after that happened? They stopped raising rates. And then they started lowering rates. And they kept lowering rates until what? The stock market gets back to where it was, and the economy didn't blink. The Dow fell 25%, and it had zero impact on economic activity in the United States. But this is what they're worried about. They raise rates too fast, and the market kind of sinks. This is nothing. What we saw in the last 3 weeks or so, Dow falling 1,600 points, minus 16 at some point, that's nothing compared to this kind of thing. Margin debt is now at a record high. So this is what is the big problem. When I raise your rate over here, the short-term folks, then the stockbrokers have to raise the rate they charge people who borrow money to buy stock. And after a while, it gets too high, and they go, I don't want to buy stock anymore. I'm selling out. And so to illustrate this, see that little drop there? That's when margin debt fell 14%, and the Dow fell 11%. Just in that little period of time, the Dow went from 18 to 15,000. And you see, that's just nothing compared to the big buildup here. Once, at some point in time, that margin debt will start working its way off, and the Dow will really adjust downward. And that's why I still like commercial real estate. That's why my portfolio is still about 67% commercial real estate, even though the kids at TIA CREF are dying to make me get into some balanced portfolio and make me sign a disclaimer every year. Yes, I'm an idiot. I have an undiversified portfolio of commercial real estate, and I won't sue you if I make a mistake. So I understand. Margin calls. This is what we saw happen. Minus 1,600 points the other day had really nothing to do with it had nothing to do with the economy. The economy is going whoom. And the stock market should be going whoom with it. And when it went in the tank, what happened was, when it goes down, you borrow too much money to buy stock. That guy on the left there, he's the margin clerk. He calls the guy on the right, see his worried look there, and the margin clerk says, hey, your stock's down 20% today, and you have to come up with $50,000 cash by 2 o'clock this afternoon, or we're going to sell your entire portfolio. That was what was happening when the market went down that much. People were getting these margin calls, and they were forced to sell. And I love this. I heard this on Wall Street a couple of weeks ago. The margin clerk doesn't ask you if you want to work the order. What that means is you call and go, hey, yeah, I'd like to put in a bid to sell at $100. It's a little over the market, but anytime in the next 30 days, I'd sell at $100. Margin clerk says, no, pal, you got a market order. You're going to be sold in the next 8 minutes, even if it's zero. You understand what I'm saying? That's called a margin call, and that's when the market collapses for a while. And what happens then? All those margin people get washed out, and then the market goes right back up to where it was. So I think a lot of these people washed out, and now they're buying Bitcoin. There's a lot of ways you can lose money. Really, there are a lot of ways. Okay, so that's enough of you. That's the only risk I see here is that the Fed will raise you too fast and wreck the stock market. And even if they do, they'll back up and get it over. So I don't think that's a problem. You guys and gals over here, you're kind of the problem. Because the 10-year Treasury goes up for one reason alone. When it does, it hits mortgage rates on houses, for one. And it also affects cap rates on commercial real estate buildings. What makes these people go up? I can raise you all night long. These people do whatever they want. There's only one thing that bothers them, and that's the expected rate of inflation. If the whole world decides that the United States is going to have higher inflation, this interest rate structure over here will go up, and mortgages will go up, and required rates of return on commercial real estate go up. This is just a chart that just proves what I just showed you. I don't expect you to believe me. I went to school at UT, worked at A&M, and now I got a beard too, so there's no reason for you to believe anything I say. That's why I've got the data here for you. The inflation trend is nowhere, nothing. People aren't worried about inflation to speak of and haven't been since about 1982. 35 years of no inflation. The geniuses in Wall Street, a survey of 100 of them or so. Do you think inflation is going to go up? There's no expectations of inflation. So as we sat here tonight, nobody really worries that there is inflation. And that's good. But then we get to this deal about Donald Trump. It's like, hey, we're at full employment already. And then we get a tax cut. You do tax cuts when you're at the bottom of an economic cycle. When nobody's got a job, you have a tax cut to get people back to work. You don't have people at full employment and then go, let's try a tax cut there and see how that works. Let's just see for fun. That's kind of what Kennedy did, and then Johnson put it into law in 1964. A tax cut kind of at the top of a market. Here's what could drive inflation. A couple of things. One is labor shortage. Just some examples of this. Worst of the U.S. truck driver shortage still to come. Here's something to watch. If you're interested in this, if you make any kind of living based on whether this 10-year Treasury goes up or down, what you want to watch with me is in July when the 260,000 Teamsters truck drivers renegotiate their contract with UPS. Now, when you're short truck drivers, what do you think you're going to do when 260,000 of your drivers go, hey, kind of looking for a raise? I'm going to be really interested to see what rate of increase they get. Do the Teamsters get 2%? That's nothing. Do they get 3%? That's nothing. Do they get 4 or 5? That's something, because what happens is when the Teamsters get 4 or 5, then the coal workers or the government employees union or some other union, then it's like, hey, the Teamsters got 5, we want 5, or we're all going on strike. So watch that this summer to see, because I expect it could be pretty high. The Cass Freight Index the other day, that's a measure of all freight flowing through the United States on every kind of thing you can think of that carries freight. Here's their words. Capacity in most modes, that's train, airplane, and car, is extremely tight. Pricing power has erupted in these modes to levels that spark overall inflationary concerns. Uh-oh, did you hear that over here? You just heard the words inflationary concerns? You're already up 0.5 point just by reading that. Mortgage rates go up 0.5%. Tyson Foods says a nationwide shortage of trucks will add $200 million to its costs. It also says increasing wages. Everybody's raising wages. Walmart's going to go to $13, $14, $15 an hour. Everybody's going to $12, $13, $14, $15 an hour. They're going to have to, and you've noticed Walmart's stock has gone down because of that. That's what happens when you pay people more money, your profits go down and your stock goes down. That's just kind of how it works. So the inflationary pressures are here. Companies are raising minimum wages from $8 to $11 an hour to more like $12 to $15 an hour. And so we're going to have to move that through the system. And people like Tyson Foods are going to try to charge more for chicken. This guy, Robert Kaplan's the president of the Dallas Fed. Just like a week ago, he came out. So then this is the judgment of the Dallas Fed economists. The current levels of headline unemployment as well as U6 unemployment. This is important. I mean, this is coming from the president of the Dallas Fed just a few days ago. We're in an economy that's either at or has moved past the level of full employment. That means wages are going up. When a guy says that, these people get nervous. Darn, it was Tyson Foods saying that. And then it was another group. And now here's that Dallas Fed guy. I'm getting nervous. And that's why the 10-year Treasury's been moving up. Okay, now back to this. We can do this. Okay. So that's one way that inflation can go up is the Teamsters get a 4 or 5% union contract, and then every other union in the country gets that too. The second one is that the price of oil goes up to $100 because people in the Middle East can't get along. I mean, that's been going on for centuries. And so it's not that big of a deal. But the big event, like I told you last year, is that the Saudi government is going to try to do a IPO. They're going to sell you. Hopefully, between now and the end of the year, you can buy stock in Saudi Aramco, the prince's family oil company. They're going to do an IPO by the end of the year. And if you're trying to sell stock in an oil company, do you think it's a good idea that oil's higher? Can you see how that would work? If oil's really high, your IPO is going to be worth a lot more money. The Saudi prince needs money. They're going bankrupt over there. I told you that last year. They need money, so this $100 billion from this IPO is a big deal. So they'd love to have the price of oil really high this year to do the IPO. And this crown prince, that's his picture there, he's kind of found out the magic code. Back in July last year, Saudi foreign minister says Qatar's called to internationalize the holy sites as an act of war. Man, when you use the act of war, everybody perks up and the price of oil goes up like $5. And then back in November, the Saudi Arabia prince accuses Iran of an act of war against the kingdom. There's another $5 in oil. And then Saudi Arabia says Lebanon declares war, deepening a crisis. Do you notice a couple of phrases that just kind of keep coming up over and over? Every time the guy declares war on somebody, price of oil goes up $5. So over the next 6 or 8 months, I'm guessing he's going to declare war on everybody until the IPO is over. And then after that, I'm not sure what will happen. Here's the third way that you can get inflation, and this interest rate group over here starts going up, and that's if our federal government starts printing money again with big debt. Everybody in this country for the last 20 years has been nervous and asking me, how come you don't talk more about the fact that our government is $20 trillion in debt? And now it's 21 or $22 trillion in debt. How come you're not talking about that? Well, the reason you guys over here and gals weren't worried about inflation was because you had people in Congress that used to be called the Tea Party, and now they're called the Freedom Caucus, and there was enough of them to be sure that the federal government debt doesn't go from $22 trillion to $40 trillion. Those are called deficit hawks. Governments all over this earth do this. Check Venezuela. See how it works in Venezuela. Governments like to print money and give it to you. That's politics. This is how you get into office. You promise people you'll give them stuff if you vote for me. You can't pay for it, so you print money and give them stuff to get reelected. And the Freedom Caucus is over there saying, we're not going to let the debt go from 22 trillion to 30 or 40 trillion. But here's what's been going on lately. The Tax Reform Act cost us about $1.5 trillion. So if you didn't like 22 trillion in debt, how are you going to like 23.5 trillion based on the tax reform? And then whatever they did just a couple of weeks ago to keep the government open, I don't even know what you call that sort of thing. It's kind of like when I used to have cats. I could smell the litter box. I just didn't know where it was coming from. It's like, I know somebody went in the litter box. I'm just not sure who it was. All right? Well, when they did that late in the night, let's keep the government open for another 3 months, what did they do? Add another 300 billion to the deficit. So then people start talking about, hey, how else can we give away money? How else can we raise the federal debt from 21.5 to 22.8? How can we get up to 30? How can we possibly do that? Well, let's just build a couple of $1 trillion worth of bridges. That would be good. We'll get lots of votes from everybody that we build a bridge for. How can we pay for that? Well, who knows about that? Let's just let the government pay for it. Let's just print another $3 trillion in bonds, and we go to $27 trillion in debt. And these people over here are really worked up. Okay? That's when interest rates can start going up, way up. And so I saw this in December. This is disturbing to me. This is the headline, December 2nd. This was right after tax reform. This was before the $300 billion cat litter incident. Deficit hawks take a back seat. You know what that means? Nobody cares anymore. We're back to bipartisan politics again. You Democrats want about $5 trillion and stuff? Fine, we'll give it to you. You Republicans want $5 trillion and stuff? We'll give it to you too, and we'll raise the debt from $21 trillion to $31 trillion. That's how it was done in the 60s and the 70s. That's why there was bipartisanship, because everybody got everything they want. And these interest rates were how high, Nestor? Like 15%, 18. The last house I sold in Wichita, Kansas was a VA loan at 15.5% interest. That's what happens when your government prints money and buys stuff that they can't afford. And we haven't done that for 35 years, 1982. That's why we can't hardly even fathom it. We're on a precipice right now. People are watching this country like a hawk, saying, are you going to have the guts to not spend money you don't have? Either raise taxes and pay for these bridges with user fees, or get some private person to come in and do it. But whatever you do, do not print money and build this stuff. We can do it, but interest rates will start going up pretty big at that point. And it's starting to happen already. This is actual government bond issuance. Up through September of 2017, that's the end of the fiscal year, we had to sell a net of $519 billion, okay? So we flooded the market with $519, and all these bond investors bought it over here. They go, hey, we're cool with that. We'll buy $519, we're good. Next year, it's going to be $955. Year after that, $1.08 trillion. The year after that, $1.3 trillion. Every year, we're going to have to feed these bond people $1 trillion worth of more debt, and we got to hope that they will do it. Because all you got to do is wake up one day. All these people have to do is wake up one day and say, no thanks, not buying. And the bond market closes. When you're in a situation like this, the bond dealers get nervous. Like, dude, my customers over here don't want to buy this stuff. I'm the bond dealer. I buy it from the government, then I turn around and sell it to these people. And you know what? When I buy it from you, by the time I can turn around and sell it to them, I lose money and the bond market closes. That happens occasionally. It's not the end of time, but it's a signal of a problem. We don't have that yet. We're not there yet. But this right here is the issue. Watch two things this year. I'll be watching closely Teamsters Union contract resolution and how we finance infrastructure at all. I'll be surprised if we have any infrastructure bill at all, but if we do, watch how it's funded and whether or not it will add to the deficit. So with that said, I want to just thank you for your kind attention, for being here. Thank you, Nestor, for inviting me. And I hope you have a wonderful year here in Sedgwick County. Just sell a bunch of stuff, enjoy life, and knock them dead.
I have a question.
And Herb has a question that one question just because I got after Herb.
In all the markets around the country, this real estate's going crazy. It's really high priced, and there's very little supply. What do you see in the future?
Okay, so Herb's basically saying real estate is higher than a kite. Yields are pretty low all over the country. The good news is about that is that secondary markets, to a lot of people, where I live, where we live here would be a secondary or a tertiary market. People hate that when I go to Dallas and tell them they're in a secondary market, but they are. It just irritates them to death. But here's the good news. Prices are highest in places like San Francisco, New York, Boston, Washington, D.C., and then when you get into secondary markets like a big Dallas and Houston, those are pretty high too. When you get down to a tertiary market like Wichita, the yields are higher. And so I've been reading about investors moving out even further. They've moved out from New York to Chicago and Dallas and Houston. Now they've overcooked those markets, and now it's tertiary markets coming up next. So I think there's still some horsepower to run, even though if you've been in the business a long time, you think yields are pretty low on real estate. Compared to other places in America, those yields aren't that low yet. So I still feel like there's some room to run here. We're close to the top of a market, no question about it. But here's the thing about it. If you're thinking about buying Bitcoin, for example, okay, instead of some real estate, here, I'm dead serious about this. You'd be much better off to buy an apartment building that gives you a 6% yield. Do you think apartment rent in Wichita goes up or down when the Dow goes down 8 points, 8%? No. You don't have to worry about whether the market's going up or down if you own a house next door and you're renting it out, or you have an apartment building and you're renting out apartments. That's why real estate is a preferred investment for a lot of people, because they don't have to sit there and worry about this, because real estate doesn't do that. Certain types anyhow. So that was the one question, and I'm at 6:13. I'm going to quit 2 minutes early. And thank you so much for your kind attention, and have a great year this year. Thanks.